Consumer sentiment continues to tumble for 7 straight months now, despite retail spending last week showing 5 consecutive months of record numbers. Business editor Ross Greenwood joins us now. Ross, is there some confusion here?
Danica, it's a bit of an odd one, this one. So in other words, people have got intentions that they're going to spend more money, which is where you get record sales numbers from. But the second thing is they're actually concerned and their consumer sentiment is falling because they're worried about rising prices. So you can see here these consumer sentiment numbers coming from Westpac and Melbourne Institute, which is, the key economic consumer sentiment numbers that we have in Australia. You can see they've gone below 100, which means really people are in the doldrums a little bit. Now, the interesting thing is that those sentiments are not stopping people spending. In actual fact, they're going out and spending more. Even though they're expecting to pay more for goods and services, they're saying they'll certainly spend more on transport, and that makes sense with petrol prices where they are. And so really it's a case whereby people have either got the ability to pay for those things, or they're simply just sucking it up and spending the money anyway. But this is the really unusual factor about Australia's economy right now, is you've got all these signals of a booming economy, while at the same time the sentiment is very, very poor.
It is. So what do retailers do about all this?
Well, right now they've got to try and make hay while they can. And the fact of the matter is they've got to try and get some hype around it to give people a sense that they're getting a bargain, to give people, if you like, some hope that they're actually getting some value. Because during COVID, of course, we were very happy to spend because we were locked up and it was all domestic spending. But now, of course, it's all changed. Well, one thing that they can do, and this is Amazon, which is one of the largest retailers, they've got its Prime Day on today to try and, if you like, get some of that hoopla going. I spoke with its Chief Executive for Australia, Janet Menzies, at the warehouse a little earlier today. Here's just a little of what she had to say.
Prime Day is all about recognizing our Prime customers. It's all about saying, listen, we're glad you're with us, and showing them a great deal. So sometimes that might be inventory that hasn't moved that we can put a great sharp price, but fundamentally it's about working backwards from what we think the customers want. So, top brands, like you'll see it today if you go to the site, there's, Bose, there's Apple, there's Barbie, there's Lego, the brands that most customers are interested in would know well. And then we also have top sellers. So, things like the small businesses that you'll all see features, spice mixes, everyday basics, we've got it.
So in other words, you've got to create a little bit of your own hype as well. Now, this is not being helped by inbound tourism. Numbers out today show that the number of inbound tourists in June is still around about a third of what it was pre the pandemic. It's growing, I've got to say, Danica, but it's certainly nowhere near where it was before COVID hit.
And Ross, one of the most celebrated takeover deals of last year of buy now, pay later company Zip taking over Sizzle. Well, It fizzled out today. It
fizzled out big time, I've got to tell you. So these two companies were among the boom in buy now, pay later companies, Afterpay, of course, being the leader. Now, it's got a deal it found with Square. It's now listed under those. These two companies have absolutely collapsed. Now, after this deal sort of fell apart, the price of Sizzle shares dropped by 35% on the market today. But that's not even the beginning of this story, because both of these companies, despite this $491 million takeover, which has now fallen apart. Now, you can see what's happened here today to these Zip shares. So Zip shares today are up by 3.5%, but if we go and have a look at the Sizzle shares, what you can see there is that they're down some 35%. Now, the whole thing is that over the course of the past year, though, the Zip shares are down 93%. So they've almost lost all of their value. Sizzle shares down 97%. So in other words, if you'd invested in Sizzle 12 months ago, you'd have lost just about all of your money, which is very unusual even in the stock market.
Gee, that's a lot. You'd be regretting it. Ross, thank you. We'll see you again at 4:30 for Business Now.